Uh.
All right. Share the chat. See if you guys can hear me. Hopefully. Okay, bet. Cool. Okay. This mug was tripping just a minute ago. I don't know. It just be technical. I try to get on the chart early. Like I could do the same exact thing every single day, and it's always something. But I knew that from doing videos and stuff with technical difficulties. So it's just something you got to deal with every now and then. And like the sound wasn't working. I'm like, what the heck happened? So I figured it out though. So cool. All right, let's get to it. I haven't even looked at the chart yet. I had I had a small trade I was looking at this morning. I ended up letting it pass me by. I'm like, I wasn't even focused on it this morning. It was this one right here. It was at 6. It was this one. It was clean too. Right there. That one. Was that push up right there?
You got it, or you say you didn't?
No, I didn't take it. I seen it though. That was that this morning. Nice 3 to 1. So 10 points for 31 points or 30 points. So just trying to see. It looks like it's come back to it.
Yeah, good. I think I really don't remember how the shit's supposed to go.
The
candle that started at 5:30
uh-huh.
to 5 to 6, those 3 candles, and then balance into the next 3 candles. Does that create the inversion?
So the one that creates the inversion is the first one after the push down, and the first one to be so it'd be inverted. So it'd be this one, the one between 5:55 and 6:05. Yep. Oh, 15 minutes. See. So yeah, 15-minute it will be 5:30, 5:45, and a 6. So the inversion will be this one. So if you did it from 15-minute, it would look like this. It'd be that. Let me move it over. It'd be this here. Confirmation? Yep. Inversion is always first. And then this is a confirmation. But now price is blowing through that. And then this didn't even see how we had the confirmation. Price wasn't even going nowhere. It just consolidated here. So it was showing signs of not even wanting to push up. And then it finally is breaking loose now. But you still want to see how the body's going to close, because the body can close above this and price can still go up. Because all these are equal highs too. So price can still want to go that way. I haven't even looked at the market yet. So I want to. Yep. I'm making a new PDF file now. That's what I've been working on last weekend. So hopefully I can get it to you guys this weekend. Kind of being more clear on that. Just so something you can glance at like a cheat sheet. Yeah. Mm-hmm.
The whole week, you know what I'm saying? Like versus just doing this shit like every day for 5 days straight.
Mm-hmm.
But then I feel like I
And the thing is with that, I wouldn't pass you if I think you didn't know. I know you know.
Yeah.
Is what's happening is you question yourself a lot on things you see, and it causes you to look at it different. We'll pick a day and we'll go over some stuff. We'll find like an hour or so. We'll just go over some things and kind of clear some stuff up. That's what it's for.
Yeah. Yeah.
That's what this is for.
I'm looking at it right now.
Mm-hmm.
Yeah, that's what I'm looking at right now. Like, okay, well,
I'm starting off on an hour first. You start off on an hour?
yeah, well, I got it right when you put that shit in the group.
Uh huh.
I was like, okay, let me go look at it. I'm like, what hours look like? You know what I'm saying?
Boo boo.
What's going on?
Yep.
Yeah. It's
But look.
took our age range high. They never took age range higher.
Mm-hmm. And then look, I see this right here. That's where it came from. This consolidation from right here. And the reason why I use this consolidation, because price had a nice push. This is where we had back and forth, and then we had that expansion up. The main reason why I use this consolidation is because I seen price break below it and then try to go back up into it. So it was showing signs that it was acting as like a barrier or a magnet, and it did the same thing here. So going into this morning, just seeing how price is going above it and doesn't want to go above it, and then it went right back below it. Price just sitting in this general area, so that'll be my focus point. And then seeing how price, if it wants to, goes and shoots down for Asian range low. But you gotta look at what type of market you're in too. Well, right now price is pushing to the downside. But if you look at it from a bigger standpoint, you see we have this high all the way to the left, this high all the way over here. If I drag it all the way to the right, that means that basically this whole thing is a big old sweep. So at some point, price is going to shoot down here. Got a shot down here. You see how price wants to play out? Okay, so right now, like I said, I haven't looked at it yet. I'm really just getting to it, so I don't see how price is playing out. So I got it marked up already. Let me take this off. This is what I have marked up already. So we just got this consolidation here. And we got that consolidation that I had marked up just a second ago. And then price is coming back down to this imbalance, and see how price plays out at this imbalance from there. And then that'll show signs of price wanting to go to the downside. But the thing is, if it goes down and it takes out Asian range low and it sits here, that thing can shoot right back up. But we are in a market that just took out a high as well, so it's just trickling down to the downside. So the main thing is just getting in sync with order flow. That's what you want to do, or just price action. So for me, I want to use the 1 hour first and see which way is price trying to go. It's trying to go up or trying to go down. Right now, it looks to want to go down, but also I see it's a bunch of BS right above it. So in these circumstances, that's why I'm sitting back and waiting. And like you see how I just showed you at 6 o'clock in the morning, trade was there, 10 points, 30 points, done. But when the market opens, now I'm really sitting back. So I want to make sure that I don't get wicked out or get thrown around because I'm just trying to jump in something. Like it gotta play out. So that's where time comes into play. Let's see. Yeah, these summer markets been slow, man. So you had this inversion right here. Inversion there. Yeah, confirmation till inversions boo. You had confirmation here, but that confirmation already took out this low, and then this low would have been this price leg. So in this case, that low is taken out. Now we go from that high to that low. Price pushed up. Now taking up this low again. So this is where you wait. You just want to see how price is playing out. You're not jump the gun or anything. Just like how it was yesterday. It was like where's in. It pushed up. As soon as it would start showing signs of not wanting to do that, out of there. it. So like with this push down, we're just waiting for it to start consolidating again.
So on this one, the inversion happened at 9 o'clock. That third period at 9 o'clock.
9:30.
Inversion.
So there's no inversion yet. Oh, you talking about the one that to the downside?
I'm on the 5 minute thing. It's the one from 8:55, 8:50 to 9. It's 8:50, 8:55, 9.
Right. So that top one is an inversion. So once this inversion is made, price pushes down, but this confirmation is being made. But look how low it's already took out this low already, because this will be the price leg here. This little piece right here. Well, try like this.
So which one is it? You said, what's the inversion?
This one.
Yeah, so those three right there, that's the inversion, right?
That one. Because when you have an inversion and then the confirmation is here, being made right here. The reason I don't like this one is because, for one, it's a lot of risk. It's 28 points. And it's a lot of risk based on the fact that this low, the price that was taken out already. Now, could it continue down? Yeah, it can continue down, blow through this imbalance, and then go for Asian range low. But I would like to see this imbalance a lot smaller and a lot higher. I would have preferred for this low not to be taken out yet. Yeah, but the fact that this low is already taken out is like, it could play out, but I'm not jumping to conclusion on anything. So whenever you have that inversion and you have that confirmation, if you have the price leg, because the price leg is technically going to be a dealing range anyway. Like if I went here, this would be a dealing range at that moment in time. So this confirmation is inside of a discount. So I would like to if it was like up here somewhere like this, that would have been cool, but it's not. So when you have something like that, you have to factor in risk where it's trying to go, and I don't see it getting to Asia range low clean because it still has this 1 hour imbalance it has to deal with, and we just took out these lows, all these lows here. So I want to see if it's going to like retrace back into that consolidation and maybe create another confirmation, which is just going to be creating a ceiling. So price pushing down and creating a ceiling. So if I went and I moved this to the new low here, now that's further into a discount. Premium. Now it's getting into a premium. But with this one, I want as less risk as possible because I'm not confident in it just shooting down because it has that 1 hour imbalance right there. Like with this right now, if you would enter right now, you'd be risking at least 30 points. And just to get to that low that it just made will be almost 30 points. So that's barely a 1-to-1. And it's just 1 hour imbalance sitting right here. Now, could it play out? Yeah, but you want an A+ setup, and that A+ setup is not always about the best model. It's about the best odds of it playing out based off of traffic too. Does it have any imbalances in the way? Okay, is the price leg of the low or the high taken out yet? Okay, also tied to Asian range high and low, because Asian range high and low is not end all be all. It's just a confluence. We're just adding on to whatever we're already looking at. So all of those go into perspective, and you gotta be like, okay, you know what? I don't like how it's looking. I'm good. But that's the problem. If you don't have that to where you looking at everything, you looking at everything that's already good. No, like I'm prejudging. Like I look at it, I'm like, I don't like this one. But that's what some people do good at, because some people paper trade it. If you get good with paper trading and being able to turn that switch off and on, like when you don't like it, but you want to see how it plays out, you paper trade it. And then when you like a trade, it looks clean, and then you take it, that's game over. Because it's going to, your mind is still going to see it. And then those trades you take on the paper trade, even though it's not going to count towards whatever you're doing, you still can see it from the aspect of, okay, damn, it did play out based off of this, this, and this. But if you just watch it and then you never do nothing with it, you're gonna lose that thought. If I ask you about that same paper trade based on you taking your trades and the paper trades, if I ask you about that trade, you never took it, and I asked you about it Friday, you be like, Monday. Oh, we talking about the one we seen and we did that, and then I think you did this, but I'm guarantee you, if you was in that trade and you pressed buy or sell and you was dealing with it, you'll tell me exactly how it went. So those reps do matter. So this, like I was telling my student yesterday, a jump shot is a jump shot, no matter if it's in practice or it's in a real game. The only thing that matters, with the difference is the pressure. So is it a fourth quarter jump shot? Is it a half? It's a buzzer beater. Is it a game winning jump shot? Is it a overtime jump shot? Like the jump shot is still a jump shot. So that's how I look at it. So my trades, the trade is a trade. I just have to base it on the right trades that I like. Now the ones that I like may not be the ones that you like. That's why I don't want to come on here like we are though. I'm gonna have days where we're taking trades together, but for the most part, I want you to see everything in its totality. Because with the model, to me, I feel as if you can see it anywhere. So it's on the 1 minute, it's on the 5 minute, it's on 15 minute, it's going up, it's going down, it's in consolidation, it's in a reversal, it's part of a retracement, it's everywhere. So the way you implement it is based on you, but you don't realize that. Not you in general, just everybody in general. You won't realize how to tailor make it towards you until you start dealing with it. You're like, man, I don't like the 15 minute. I don't like when the 1 minute does too much stuff, or I don't like when it's bouncing off of a 15 minute. I like when it's bouncing off of an hour. I don't like when it's bouncing off of a 15 minute. I like when it's bouncing off of a 5. Like everybody has their own perspective, but the model is still the model. That's why I can have students, one is buying, one is selling, and they both could be right. You're just waiting on the right opportunity. So it's more about seeing things, and that's what these lives are for. Like we've been going live, 2 weeks now? Give yourself 30 days of being consistently seeing every single day and seeing how I'm waiting, being patient, see how I'm looking at things, see how I'm talking about a certain trade, how it's playing out, how I don't like it. All those things go into perspective. But if you go live one day, you miss the live for a week, every now and then it's cool. Like if you miss 1 or 2 days, I would say at least 3 days a week if you see it. At least watching, like, dang, okay, that candle did do that. Or did do that. Okay, how would he think seeing this? How would he think seeing that? That's what you want. Because that's what's gonna make you the most. It's not about being right or wrong. It's about being in sync. Okay. So let me take this off right now. Because that's there, but that's not my focal point. My focal point right now is nothing. And the reason why it's nothing, for the ones that just joined, is because there's a trade idea this morning that I didn't take. You had this inversion here pushing to the downside. This was inversion, and then you see the confirmation right here. There. Price pushed up here. Stop loss is about almost 11 points. Take profit was here. The high of this price leg. So now you're looking at that 1 to 3 done. This is a trade that I seen. I didn't take it. Just kind of running behind, getting scheduled back together, but nonetheless, wait for new opportunities. So the new opportunity is now what? Well, market open, and we have this consolidation that we had yesterday. Price broke above it. We failed to go to age range high, and then price pushed to the downside, going back below this 15 minute or 1 hour, consolidation. And then we pushed to the downside, bouncing off of this 1 hour consolidation. Now we're stuck between two consolidations, which is just basically a range that we're stuck in. And we're trying to see how price is going to operate inside of this range. So age range low is still there. I would love to see that go down. If price can break all of this and then it kind of goes to the downside, but then bounces off of this to go back up. Is it going to be aggressive? Who knows? But if you zoom out, price was bullish. We had a retracement, and then price is bullish again. So could this whole thing be retracement? Well, a lot of times when you're looking at price on a higher time frame, just zoom out and just look at it from a bigger scale. This will be a bigger scale from this low to this high. This is a bigger scale. So you see, like, dang, we bounced out of a discount, went straight into a premium, and now prices is sitting inside of a premium. This is higher time frame dealing range. So the rules are a lot less strict on a higher time frame when it comes to buying at a premium and buying at a discount, selling at a premium, because there's so much range within the day. You're going to have a smaller court, or smaller range, or a smaller court that's going to happen on the lower time frame that you would be a part of. That's going to be inside of a premium, but it's buying because you have a dealing range that's giving you a discount. That's because it's on a smaller time frame and that's on a smaller scale. When you're looking at it on a higher time frame like this is days. So whatever you're looking for potentially can take days. And I'm not a swing trader, so I'm not looking at it from that perspective. I want to be based off of what's happening today. And you want to always come with that mindset of what can happen today. So I'm basing my trade or my theory on what I'm seeing now is what can happen today. So today I see that we came from discount going into premium, and then right when we went into premium, we consolidated. But now, take this off. I know that we're bouncing off of this consolidation, and then we had this imbalance here. The reason why I have this imbalance made is because this imbalance is the only one inside of this price leg besides this one. Now this tiny one is here, but it's right at the consolidation anyway. So this is kind of like a point in price where price can consolidate again. And if it consolidates here, between here and here, then your opportunity could be somewhere inside of here. Now looking at it from this consolidation to this consolidation, this is only 95 points. That's not a lot of points. It could be a nice amount of points for a trade, but as a range, it's not a lot. Like, if you look at this range here, this range a couple of days ago is almost 300 points. Then you look at this range here. This range was almost 300 points. Look at this range here, from here to here. This range is almost 300 points. So you're averaging a 300 point range for the day. So when you're having a lot smaller ranges, like when the market is not really going nowhere, it's like, okay, what's going on? But you're jumping the gun because you're expecting price to do something that's probably not trying to do. So you look at the last couple of days, from the high of the beginning of the day to the low, this whole price is 150 points. So we're getting half of the average we've been getting for a couple of days. And then this one, this is 200 points. So now we're coming into the market right now, and from high to low right now, we're only at 85 points. So right there, that's like, oh, we're probably in some type of consolidation. Well, that makes sense because we're at consolidation. So those things you got to be picking up on. And those little things of looking at it for a couple seconds and like realize like, oh snap, the price has been doing this and now it's not doing that. You can't look at everything as the candles. You have to have a meter for yourself as well too. It's like, did I look at this? Did I look at that? Did I go to the power of the hour? Am I going to a lower time frame too soon? Even a 15-minute could be a lower time frame if you have the mindset of looking at it like that. So that's why I like to at least look at a 4 hour or 1 hour. And right now we're in this consolidation. So do I technically need to go to a higher time frame? No, because we're just in this area anyway. And when we're in consolidation on a 1 hour, if I go up on the time frame, it's probably going to tell me to stay away even more. And I probably will have a smaller opportunity inside of this. But the fact that I'm going to a higher time frame can probably scare me away. So that's like why sometimes if I have a smaller market or slower in volume, then I'll stay on that 15-minute down. I wouldn't even look at the hour sometimes, depending on price. Like right now, I'll be focused more on the 15-minute this day. Just based off the fact that we have only been so many points as of right now. And then on top of that, we just have market opening and we didn't push anywhere. So that's just like, okay, what is price trying to do? Or what is price trying to tell me? And those things you got to pick up on. And they're not easy to pick up on sometimes. But if you have the willpower to be like, you know what? I'm not messing with the market today. I'm cool. Soon you start feeling that, the first feeling of it, you got to be like, let me see if I can really see if something's happening. Not forcing anything, just mark up the chart as is, just like I did here. A couple of things in my chart, and I'm like, do I really see something right now? And it's like, not really. Right then and there, your risk factor when it comes to you taking a trade, if you were anxious to take a trade at that the given time, you should cut that in half right then and there, because that means you're probably mentally not going to be in it as well. So right then and there, it's kind of like, okay, it has to be super clean and just like in my face for me to take it. If it's not in my face, then I don't want to take it. That trade at 6 o'clock this morning was in your face. I didn't take it because I was driving. I got to the gym late, so I'm like, I ain't about to mess around with the chart. I just wait till market open, and I can't be like, oh man, I missed a trade. I could have took a trade in the morning. No, that's not how it works. If you come in with that mindset, you always gonna get tripped up every single time. So it's a patience thing, but you guys know that. But I'm always say it. So something we have happening right now. If you want to focus on current, so the way you can look at the market is two types of ways. You can zoom out and you can look at it from an overall perspective, not even from days, just the day in general. Or you can zoom in and look at it from a micro scale. And what I mean by that is just simply focusing on what's happening right now and that current price action. So when I'm looking at current price action, I'm looking at current market structure. So I say, okay, well, we just had this high over here. Let me actually take this off so you can see what I'm talking about. So if I look at current, I say, well, we had this high here. That high, basically all this was a sweep. That high swept this low. And we're sweeping this low still. Now this is showing me that price can go to the upside. Even though I see agent ranges down there, right now this is telling me that we swept a low and we can potentially go back up to this high or to these highs. But this is a sweep. This is not a break. So you want to also keep that in mind. So that means that this imbalance that I'll be focused on right now will be this one. But also remember that this candle is not closed yet. But the body of the candle is already down here, and we already have 2 minutes left. So this candle's about to close anyway. So that means that this will be my focal point right now. And you want to see how price acts at this imbalance, if it does get back to it. But this is you focusing on current market structure. Now, when you're focused on current market structure, you can take this 15-minute bias that you have when it comes to looking at it now, currently what's going on, and take that down to a 5 or 3 minute and use that as your navigation. Instead of looking at a higher time frame like a 1 hour or 4 hour, you're using a 15-minute like a 1 hour. So now if I go as 5 minute and we just took out this low, that means that my current price leg or focus will be right here. So I'll be using this current price action here. And I'll be focused on this range. Now I can use from this high all the way to this low, or I could have used this high to this low to this high and then seen that break. But I'm focused on what's current right now. Current is that this low was taken out by this push down, and then this high was swept from this high. And that's what I'm focused on right now. But the fact that we only have 80 points, 90 points right now, waiting for some type of expansion. And that could be that expansion to the downside. Let me look at something. So what I'm looking at right now is just trying to see, is there anything on the chart, pure price action, that can give me any context clues on what's potentially going on. So like even with this, as we're having this push down, I'm seeing this swing low I'm looking at. And then I'm seeing that swing low came from here. And this is where we are now. So just seeing, okay, is this a sweep? Is price going to sweep this and then push to the upside? Are we going to continue down? Is it going to break that and continue to the downside? Or if it continues to the downside, then the next bid stop could be here. Also, remember too, I don't want that many things on my chart. So I'll focus on 1 or 2 imbalances, and then that's about it. More than that, I feel like I'm doing too much when it comes to trying to figure out what's going on. Hold on. Good morning. Yep. Okay, give me like 5 minutes to get some cereal. What we looking? Let's see. Man, that thing ain't moved nothing. Nathan. Bruh. This thing ain't moving at all. And this the thing, it's like, for those who seen the market a couple months ago, look at the difference in the market now in comparison to how it was a couple months ago when it was just pushing super hard. That's how you get tripped up, because you're expecting that all the time. No. You can literally be having a problem with your trades just because of the fact of the volume of the market. And that's caused you to have all these problems that you think are technical problems. And it's just volume. And the volume is having you look at the chart a lot different. So you're expecting these violent moves you were seeing a couple months ago. You're not getting them right now. It's like, man, what's going on? I'm missing this, I'm missing that. Are you technically? So like markets like this, it's a lot more patience involved. You see a faster market, you hear patience, and then you see quick trades. It's like, dang, I should be patient for a little bit, and then I'll be able to be rewarded from that. But now you're in a market where you have to be a lot more patient, and it's not going to be as rewarding unless you're doing heavier contract size. So these markets are cool for me, because I go heavier in my contract size because it's moving a lot slower. So I don't got to be wicking back and forth 25, 30 points. I can't do that with 5 contracts. That's 25. That's 2,500, 3 grand back and forth. No way. So I want markets that's slow like this. If I could do like 10-point risk, 12-point risk, 8-point risk, but it comes a lot slower. So now we're just waiting. We got that expansion that we talked about earlier. I'm just waiting to start consolidating. I may look for it on a 5-minute start consolidating more than a 15-minute, because I already got a kind of an idea of what the 15 minutes telling me. Just gotta be aware that that imbalance, if we drop down, that imbalance is a 15-minute imbalance, not a 5. Because if you don't realize that, you can trip yourself up. And this is where the patience part plays in, man. Look at that hour. We've literally been consolidating since the midnight, and it's 9 o'clock, 10 o'clock. So it's been consolidated for 9 hours. It consolidated for 9 hours. The market opened up, and then as soon as the market opened up, it ain't going nowhere. Make it make sense. So when it doesn't make sense, it's probably not gonna make no dollars. And that's not producing that. It's just for you. You want to have those triggers in your mind. Let's see. Go look at gold. Yeah, I need to go look at gold really quick. Big drop. Okay, so I had a student ask me yesterday. I was talking to him. Was like, so what all pairs do you trade? So 70, 80, I would say even 90% of the time I'm trading NQ. But pairs I would trade throughout the year will be NQ. Let me show you. So NQ, YM, which is US 30. This is consolidating. ES, which moves like NQ. They're pretty much ideal. EQ, ES, which is S&P 500, is just a lot slower pair when it comes to volume. Gold. Then you have oil, which is crude oil, but that's oil. You have Russell 2000. So think about the S&P 500 times 4. There's 2,000 companies instead of 500. Natural gas, platinum, and then Bitcoin. I don't trade Bitcoin. I just look at it from time to time, but I don't trade it at all. Like, not even close. But for the most part, I either focus on NQ or I'm focused on gold. Oil sometimes and natural gas sometimes. I will probably trade oil a lot more than natural gas, but natural gas, as you see, nice push up, consolidation, nice push up, nice push down, consolidation. All these markets are the same. Nothing changes. The dealing range, the Asian range, as long as it's a futures market in these future pairs, the dealing range and Asian range, all that stuff is going to be the same. The new day, midnight, all that stuff is the same. And now if you're trading something like Forex, like Great British Pound versus the US dollar and all that, I don't trade that stuff. That's a whole different ballgame. But I'm talking about futures. If you're trading a future pair, everything works the same. The same way your chart is marked up, midnight, the Asian range, look at that Asian range high and low. The way we look at the market, the only thing that would change up is times, because the market moves at different times. Now the market open is the same because everything opens at the same time, but the way that it moves, and like for me, I know in a good flowing market, London is going to be manipulation inside of NQ. And then once that manipulates, the market opens and it goes the way that it wants to. Or it can further the manipulation, stall out, then go the way it wants to. But that's me seeing it for so long. So you have to know your pair. Like, I know gold like I know NQ. The reason I don't trade it because gold is a lot more volatile. And I like focusing on one pair. But would I trade it? Yes. And you're going to see markups of it. But I don't entice you guys to trade all these pairs, because for what? If you can't get NQ down and you can't get it to where you can consistently get 1 to 2, 1 to 3, that doesn't mean, oh, you're winning every day. Is that you have a consistent track record of like, here, Tony, look at my trades. I took this trade this day, I got a 1 to 2. I took this one, I got stopped out, lost 1. Now I'm at basically for the day I'm up 1. Then the next day you took a trade, caught 1 to 3. Now you up 4. And the next day I caught a 1 to 2. Okay, now you up 6. And then the next day took a loss. Now you lost 1. So now you up 5. Okay, Tony, for the week I'm up 5R. Because you had the proper risk management the whole entire week. You were taking your trades as you was going. You wasn't just taking stuff because. You had a plan. You know why. You back tested that. You have notes or your journal talking about why you did it, what went through your mind, what you seen wrong, what you could have did better. I got, like, literally, let me show you guys. I was looking at it today. This is my hard drive. And then I'll go video. So here. So I'll go green tote. It's called green tote. And I go here and then properties. This hard drive is all trading. All screenshots, all screen recordings, all videos. And it's 465 gigs full of stuff. Of me talking to myself, me backtesting, me trying to figure it out, me trying to get it right. All this is, and this is from years. This ain't just from this year. This is from day one. So all this is just me learning myself. And this is not all winning. This is a lot of losing. This is a lot of frustration. Seeing my old charts, how they used to look to how they look now. That's how I know I've been doing Asian range for that long. It was to the point where I would do Asian range, right? I would do Asian range and I would have like a bad week in the market. And I didn't realize, like, wait, I'm having a bad week because the market changed. The volume is different. It's not moving the same as it was because of the volume. I'm thinking it's me and I'm just doing the strategy all wrong, or whatever I'm looking at is all wrong. And that's how I used to look at Asian range. Because the way I used to trade before, I looked at the standard deviation of Asian range. So right now, this will be, since it broke out, this will be one standard deviation. And then I will see if price is going to go past one standard deviation based on market structure, or is it going to stop there and then go to the downside? It worked until it didn't work. But when it didn't work, I'm not realizing that it's not working because of the market. I'm thinking it's not working because I'm doing something wrong. Guess what I did? Changed it all the way up. because I see my new notes and my new screen recordings of what I was doing different. I'm like, I'm not doing that, and I can hear it in my voice like I'm unsure, but I'm sure. And then I will learn something new, and I'm like, oh, this is it. No, 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 no. That's never it. It is gonna be when you figure it out. You have right now, you guys, everybody in this group, everybody in the Discord, you have everything you need to do the same exact thing that I'm doing. Nothing different, because I'm not doing anything different. And I want to show you that. And waiting is one of them. So I'm okay with having a slow week. I'm okay with having a slow month, a slow day. But how do you go about that? Is it like, oh, I should have did something. It's supposed to be this. It's supposed to be that. Should have? Is that a true statement? Because if you don't believe that and you didn't have nothing there to solidify that you've seen that, then cool. And another question. Another question. I'm sorry. Another thing. And I had a student yesterday in his class. He was asking me that somebody was telling him that back testing doesn't matter. That's subjective. I feel like back testing is extremely important. And the one thing that I'm gonna tell you guys, I have a video that I posted in the group. It's 59 minutes long and it was going over that. But I just want to clarify something when it comes to back testing. Whenever you're back testing, grab this. I need this. Whenever you're back testing, your eyes don't want to see whatever you're looking at. Your focus should be on whatever you're looking at or what's transpiring. Having the information to the right of the chart, yes, I can see how that can play on your mindset because you're already seeing it happen. But think about it. If you have a model which you follow and it has certain steps to get you to a certain point, you're going to see it play out anyway. And then what price action already been there, you're going to see how it played out. Oh, it broke the initial stop loss. It went to the confirmation and then stopped and then pushed down. You're going to see that in the candles. But if you're looking at the market and you're back testing, just looking at every single candle, yes, because you're not seeing how the candle printed out. Now, if you're going to back test a certain time, a certain model, a way of looking at the model, how many points did it give you? Okay, before it went to a certain way, what was it aiming for? What could I have aimed for? Which price go? Okay, how did the higher time frame look? That's how you back test. So if you're having trouble with back testing, it's probably because you're looking at it from the perspective of, okay, I gotta look at every single thing. No, you're focused on the setup. What's the setup? What's the model? Did the model play out? Did the model play out the right way? Okay, did this model play out but this one didn't? Okay, this one was probably in a premium. Now we're looking to buy it, and then it should have been a discount. You can see all those things even with the chart already been played out. So for me, that's how I got good at it. My cheat code for me was backtesting, because I was able to look at the market and really dissect what was going on. That's how I could spend so much time on the chart. I was doing 12-hour shifts on the chart. That's because I spent time backtesting, but I was really backtesting to the point where I would be so locked in, my eyes wouldn't even look to the right because I was so focused on what price action was doing in that moment in time. But that's the same way I trade right now. That's how I'm able to get in sync so good, because I'm already seeing or picturing that the price is playing out. So think about that. Think about if you're backtesting all the time, and as you're backtesting, you're already seeing how the market's going to play out. Now imagine you're having that image in your mind as the chart is playing out. How do you think I'm able to look at the market and see that, oh, it could potentially do this, or it can do this, or it can do this? If this, then that. Because my eyes is like, if I'm back testing, I'm already seeing what could potentially happen out, like ghost patterns. So there is a thing in here. I don't use it. I never used it. And it's not as accurate as people think because it's going off of past data. But there is something in here that's called, it's like a tool, I believe it's a ghost pattern tool, right here, ghost feed. So if you went from like this low to this high, this is showing you what the candles can potentially look like. Now, the candles will look like that, but it's showing you if price went to that high, then this is how it can potentially play out based off past data. Now, I don't believe in that because the market can do whatever it wants. And then based off of that, That's how it's going to flow. Now, what I do believe in is looking at it from this perspective, but with nothing on it. So I'm already seeing which way it can go based off how the market is playing out. For instance, we just took out this low and price is pushing down. What are you expecting next? Are you expecting it to go super crazy? No. Are you expecting it to go up and down, up and down? No. You're expecting expansion, and as soon as the expansion is done, how do I know it's done? Because now I have consolidation. Where could the consolidation happen at? Well, it could happen right here, right at this low, inside of right below this imbalance. And then from there, now I can kind of hit my restart button, and then from there, see what price wants to do from that consolidation. And if it doesn't consolidate here and price just continues down, then you simply wait for the consolidation to be done. Now, let's say right now we have, I'll say 1 or 2 more candles where price is just like this. That's technically consolidation. So if price was to make this consolidation here and then push down again, now I have consolidation that I can use for price to come back up into. And then on top of that, what's also at the consolidation? This 15-minute imbalance. That's inverted. So all those things are tied together, but that comes from backtesting too. It's a way that you look at the market. But if you can develop the skill set to look at the market like it already played out, I'm already seeing it. So when I'm talking to you guys about the market, I'm not looking at it as like, okay, dang, we came here, we came there. I'm like, based on what's happening right now, where do I see price going? What can price potentially do? And all those things play a big part. Let's see. Alarm hit? What alarm? Gold. Oh, gold hit. So you got a big drop down on gold. Let's see. Yep. So look. What time frame is that? I think we marked up yesterday. I think it was 5 minutes. Oh yeah. I'm just marking up this confirmation. The inversion's right here, real tiny, right there. And then you see it broke above, and then this candle broke above, and then this also created a floor. I'm just seeing where the initial stop loss is, which will be there. That is all, yo. And I'm only looking at this. I'm only looking at this because my alarms went off, saying that it was back at confirmation. So now, oh shoot, that's that. So we'll see how that plays out. That's a 5-minute confirmation. We'll see. Because price is pushing out heavy, and when price is pushing heavy like that, and you have something that you're looking for, like a model, if it's pushing out heavy like that, you don't want to look at it pushing out heavy and be like, as soon as it push down, I'm gonna get in. Now you can, like your trades like that, you're gonna see me do where it's pushing out super heavy, but I'm anticipating it pushing out heavy because I'm looking for it to go back up. When it's pushing out heavy like this, you want to see where it's gonna stop, and that may cause you to miss the initial entry. If it's pushing out heavy and you're waiting for it to kind of fade out or fizzle out, in that case, it's just like, okay, is it gonna come back to my entry or is it not? And you got to be okay with that. But yeah, so let me go back to the NAS now. I think this is gonna punch down. Look at the hour, and then look what's sitting right here. Say it again. And then look, you got this consolidation right here, and then with consolidation too. So let me show you. You got 1 or 2 ways of marking up consolidation. So you see in this case, you have all this back and forth. I can use this whole thing from body to body as consolidation here. And then I can mark it up like that. And I see that price is still inside of this range. But what I do most times is I want to look at the initial back and forth, which will be this before it dropped down and went back up into it. So that'll be, for me, it'll be here instead, because what I see is price consolidated, broke out of it, came back up into it, broke out of it, broke it back above it, and then continue. And now we're just blasting through it. So now this can be a huge rejection back up into this. But either here or there. Let's wait to see how price plays out. So I'll just set an alarm to see if it comes back up here. Yeah, this is good. Yeah, this is good. I want to make sure I don't want to confuse y'all. So 16.3. I'm about to go back to it though. So I set an alarm there for a low of the confirmation. The consolidation. All right, then in Q, we're heading towards the Asian range low. So now, as price is headed toward Asian range low. What am I looking at right now? I zoom out. First thing that catches my eye is this wick. I want to look at the midpoint of this wick. Because it's sitting there, it's this long wick, and then this huge rejection back up, and then price pulls back down and then goes back up. I'm asking myself, why did it pull back up from here? And then you start asking questions and you get answers. And that's the answer right there. We had the midpoint of the wick, and price went to the midpoint and pushed right back up. So now I'm looking at it from a confluence perspective. I want to see if price punches down and takes out that Asia range low. Is it going to continue below this, taking out this low? Or are we going to sit up inside of here and then go right back up? And let's see. Let's see something on the lower time frame. Hold on. Yes, folks. Okay, so okay, so 5 minute. I want to see what's happening on the lower time frame. So look at that consolidation. Push down, back forth, back forth. So now look, take all this stuff off. Quick second. You have this push down, this push up, this push down, and this push back up. So when you're seeing this back and forth here, these two candles can act as consolidation, but you're going to see consolidation like this, more or less. When it's like this, you're looking at like a retracement. This retracement back into this range. So now, as price is pushing down, I'm looking to see where it's nice, clean consolidation at. And look, it's trying to get something right here. Like this range here. Light up back and forth, and then we push out of it. And you see how right now all this imbalance that we're supposed to have is filling. So the only one that was left open before this push down was this one right here. Take this off right now. Out of this range. The stuff that I'm not using on my chart, I want to get off my chart as fast as possible. Because I don't want nothing enticing me on what I'm seeing besides a couple things. Now, granted, you're going to see things just in general on the chart, but you want the things you're focused on, you want those on the chart. Everything else is there, you see it, but what's your focal point? Still got that consolidation. Yes, sir. Yep. And you see that midpoint is inside of that consolidation. That we can come back down to from I think that was 15 minutes. Let's see, 15. time frame is that? Oh, it was the hour. Was it the hour? Am I tripping? Where is this? Hour. So, hourly wick MP midpoint. Well, look how the hourly is bouncing off the imbalance. So now, when you have something like that, you can look on a lower time frame and see if it's getting in sync with what price is telling you right here, because this can be going up to just to rebalance this low right here to close this gap or imbalance, and then continue to do whatever it's trying to do. But now we have expansion up. So gotta be patient, fellas. Sorry. All right, so you guys see this 3 minute developing. We have inversion here, and then this candle can close, and this candle can create that confirmation, and then that'll be below that imbalance, and then it's a lot of points though. You want to see this push down, because as this pushes down and closes this imbalance up, that'll also close the initial risk for the trade. It'll make it a lot smaller. So right now it's at least 35 points at bare minimum. So now you gotta ask yourself, where could it go? Well, the price leg, the initial price leg off this consolidation is here. So from that high to that low, it's hard taking the high now. That's nowhere. That's only 19 points from that entry. So you look at where else could it possibly go? Well, from there it could go to this high, back above the consolidation. That's 49 points. That's just over a 1-to-1. So just to get a 1 and 2, you would need 70 points or 70 some points, right? Let's call it 80. So, but now think about it. Based on what you're seeing, you have a couple different perspectives, because you can be looking for price to go up, or you can be looking for price to go down. But you also looking at the fact that we bounced off of that hourly imbalance, but the candle has not closed yet. So now we're sweeping that high, and if you look from this perspective up here, that will be here. We looked at it from a 3 minute perspective. Here. Here. So if you're seeing the buy, you're seeing this, and if you're seeing the sell, you're seeing this. There's a gap between the candles, so I have to include that. You're seeing that, and that risk is almost 11 points. But let's say if you were looking for the buy, right, and you seen like even this situation, now you're having a second imbalance being possibly created. Is it going to go to the second one instead of the first one? Then punch to the upside? Well, if it does that, let's say that this is your entry right here, stop loss had to be here. That's 11 points. If you target the high of the consolidation, that's a 1 to 2 right there. So see how the confirmation, the size of the confirmation makes a big difference on the outcome of the trade based on risk. So it's all based on which one you want to take. So like I told you, for me, depending on how the trade plays out, or it's playing out, I will either take the first one or the second one. In this case, the first one is too much risk. And then the second one is a lot less risk, but it's a lot higher in price already when it comes to where it's at, just in general. Because if I looked at it from a dealing range, it's well inside of a premium. If I looked at it from this aspect, from this high down. But if I look at it from this one here, let's see where it's at. From that high to low, it's inside of a premium. So in this case, this is not something I'm looking for, because I want this to be down here, which the bigger one is, and I'm not taking no 35-point risk. Even if it pushed up 200 points, that's a lot of points if you're not confident in it. It's different if you can tell it's going up based off of what price action is telling you. Right now, we're stuck between two ranges. There's that push up. If you guys are looking for a sell, that's the opportunity. That's the risk. That risk, a decent amount of points for sure. 11-point risk, that's cool. But look at the 1 hour. And look at that 15-minute, straight up. Right after what? Right after that hourly imbalance. That's supposed to be inverted. Call me in 10 minutes. I mean, not 10 minutes. Call me in 45 minutes. So yeah, when you're looking at your trades and you're trying to get a general idea of what you're seeing, if you're only focused on 3 minute, 5 minute, look how it looks. And then you look to the right and look at the 15 and 5 minutes, like, okay, this price action is not the cleanest. But the 3 minute or 5 minute will tell you that it appears to be. But thing is where are you at? That's the key thing. Look at a 4 hour. Yeah, just back and forth. On a 4 hour, we come back to consolidation. Yeah, we come back to consolidation. That consolidation right there. So on a 4 hour, it will be just for a visual representation. Basically that. So the 4 hour and the 15 minute lining up for consolidation. But you gotta be willing to roll with the punches. Now it's coming back down to that floor, but also it's coming back to what? This consolidation right here. Anybody who's looking for the sale, let me look in the chat. Okay. Say it again. It's consolidation. I mean, confirmation. Yeah, that's the confirmation. So you got the inversion and the confirmation for a sale now, and the price tapped it. Yeah, that's a trade though. That's a trade though. Once it tap in, and because the amount of risk, think about it. Right now, if you in this trade, you're already up 19 points. You risk 11. You already at 1 or 2. Uh huh. Uh huh. 936. Okay, you can get that far off. Right now, you up 14 points. Now that's a 1-to-1. But see how it's acting now at the floor. Right here, you have to make a decision. Like, okay, am I going to hold this trade? If it comes back to my entry, I'm getting out. But it already gave you 1 to 2, just that quick. Yep. But yeah, just like that, it gave you 1 or 2, and then now it's pulling back up. But you know why it's pulling back up. Now, could it just blow through that and then continue down? Yeah, but that's the consequence you gotta have with holding a trade and thinking it's gonna continue to the downside. That's why I like to show you two different perspectives. I'm showing you a buying perspective and a selling perspective. Because remember, that bounce off of that floor was a second confirmation off of the push up. You got the first one right here. And the second one's right here. So see how it's stuck between two ranges? It's like it can go either or. It's based off what you're seeing. That's why when it comes to you guys as trades, it's like you don't realize that you can see both. And I want you to be able to see both. So I want to show you multiple opportunities. And it's just based off the one you want to take. Oh man. Squeaky chair. Chair brand new.
We can't hear it though.
You can't, bro. It drives me crazy. I ordered a chair, it's not here yet. Ah, listen, WD-40 oil, lubricant, all types of stuff. I'm surprised they can't hear it. That's the crazy part. Okay. Oh my god, look at that. I didn't even see that just happen. You still in it right now? I know Jose said he was looking for it.
I put it. I almost want to jump back in, but if it's dropped, it's shot back up. Like they just wait real long.
Oh, yeah. Big rejection. Big rejection.
Yeah, like they're not pushing back down to it. They just. I can't. I'm at a pay ball with no quarters, man. I can't.
Dog, man. You see, we called the whole thing. You see what I'm saying? We called the whole thing. It's just confidence in self. Because think about it. With that trade, what would have scared you to not take it? Why you got out of it? You got out of it, right?
I got out of it because I thought it was gonna start pushing. I pulled my stop loss down and it touched it. And then
So okay, so what made you get out? What made you close it?
I just thought it was gonna bounce because you were like it could bounce back up off the other motherfucker and shoot back up. Like I didn't fucking know. I was like, because yesterday it never took it took out Asia range low, but never
There it is. Because of yesterday has you thinking about today.
Yeah, I'm like, shit, nigga, that's what you
No.
if fuck around won't push, if fuck around push back up, and then instead of being up $10, nigga, be down nothing. Like, but if I put it back just to the initial entry,
Uh-huh.
I would still been in it. But then like I still like I probably would be like, okay, well, it went down, and now I'm waiting for the next candle to print.
Yep.
And then the motherfucker it's a free trade. I just wasting my damn time. But it like the way it went down, like it didn't even do it for like 5 seconds. It went
Now,
down,
base that off of how many trades you seen that happen before, besides the one day.
what there it went down and
Uh-huh.
it jumped back up.
Uh-huh.
I can't hear you. What you say?
No, so yeah. Yep. So how many times you seen that happen besides today? Oh, yesterday, I mean.
Where it didn't go for where like it's going right now, like it pushed back up.
Mm-hmm.
Or you talking about where it had a big rejection like that?
Yeah, like when it had a big rejection and you like, oh snap, I gotta get out.
Every time I click the button.
I can follow you.
They can buy against a nigga. I already know. Like, let's go.
Yeah, with those trades. So if you're gonna be the person that gets in and you're always putting it like moving your stop loss, always thinking about it, you're always gonna feel that. With me, when it comes to trading like this, what's the risk? Is the risk cool? Am I okay with the risk? If it pulls back, smacks me out, so be it. That's part of the market. But I'm riding this no matter what. To my 1 to 3, or it gave you 1 to 2.
And it did, and I was like, but that's what I'm saying. Like, it gave me 1 to 2. By the time, like, I fucking hate trading. If you ever about to click out that bitch, you got your call. Like, you be like, oh, it said $50, like, click out, like, oh, you up 36.
Oh yeah, yep. It do that. Yeah. Uh-huh. Because think about it, that plays a big part on it too. Is points. Like it's not enough points for you, and that plays on your mental as well. It's like, oh, like man, I should have did this. I should have did that. Uh huh. Usually, when a lot of times, as soon as you pull it, price will pull back on you super hard, and you're like, wait, I thought I closed it, and then it pulled back. You like, bro, God. Yeah. Yep. And right. That's why I tell you use a stop loss, because you got receipts. Don't be trading out here with no stop loss, because if something happened, you don't got no proof. Like, man, listen, I had this stop loss, price did this, and then it did that, because it's a company. You can go to them, they got tech support, you call them, you conversate with them, and you tell them what happened, and they'll see if they can fix it. But if you don't have no evidence on why it happened, good luck. They gonna say you the 1-800 gambling number. Uh-huh. Yep. No, man. It's just part of it. Don't even look at it from that perspective. Because the moment you start looking at it from that perspective, you're gonna think that all the time. I just So I'm gonna show you right now.
9 to 3. No, I mean, 1 to 3. Like, I'm waiting on that because I'm pushing up right now. I'm looking at 3 minutes, 15 minutes.
That showed 1 to 3, and that was the wick.
Yeah.
And think about this. Don't even look at the perspective of the trade we just called out, because we look at two different scenarios. This sales scenario came from it going up there and seeing how it was going up there. I'm like, it's going back to consolidation. That could potentially drop off. Here's a buy opportunity and here's a sell opportunity. So now, where is this market right now? It's inside of the buy opportunity. Now, is a buy opportunity going to play out? Because remember, this is the one that had the 30-something point risk. And I'm like, that's too much risk. And look how price is playing out. So now this will be a base hit turned into a home run. Because right now, it'll be, if you would have held it, it would be a 1-5, almost 1-6. I hate to spoil the moment right now, but I closed out. Yeah. For 800. Yep. And look, I'm sitting here like, bro, I'm not about to be like, oh, I could have made the budget. Man, listen, trading is trading.
Yeah, Tony, it's easy to say you trade when you up.
Bro, we just walked it down.
I know, but I fucked up.
We just walked the whole thing down.
I'm on the fucking L train to Loserville.
Loser. No, man. It just you gotta just be consistent coming to the lives, and you gonna see like think about how long we waiting for something to happen. Like it's about to be 10 o'clock our time now, so we got on here at 8:30. So we've been waiting almost an hour 30 minutes just for something to happen, and then boom,
Okay with that.
right,
But like
a 2-hour workday.
I would have been. Yeah. But it's like a 2-hour. I paid them to work today.
Yep. You just sit back, let it do its thing, and we set up 2 things. And remember, we came to the conclusion like, dang, okay, price is in between these 2 consolidations. So it's like, am I looking for it to do something super crazy? Probably not. But the thing that you forgot, remember how that 1 hour just looked. It was extremely bullish. But look at the wick now. That's a huge wick to the downside. That big old rejection. So what can scare you is you can see that 1 hour pushing up like that, and he like, man, that 1 hour about to close. Remember when it pushed up, I said there's 24 minutes left until that candle needs to close. When you see a push up on the hour, it usually happens at the last 15 minutes of that hour. And then you'll get this spike in volume until it closes, until the next hour. But it did that, and it's halfway through it already. It's like, But you have to be a good judge of character based on how the chart looks. And based on how the chart looks, yeah, you've seen a buy model, but at the same time, too, I was showing you, like, even if we got in on the buy was 35 point risk or something like that. And then the take profit was like 40 something. It was just over 1-to-1. But then the sell model was only risking 11 points, and it could have pushed down a little bit and it was giving you a 1-to-2. So which one was the better opportunity? Even if the sell model didn't play out, it was still a better risk. Because we're already in consolidation, so that's a possibility that it can happen. We are in a sell market from earlier that we looked at. Everything was lining up. So even though I'm seeing the buy, my eyes are still seeing the sell. That's why I say getting the sync is most important over everything. Because whether it's buy or sell, you can still see both. But I learned that through backtesting. And just basically how I described it to you guys now, how I look at it, I got it through that, seeing it already play out. If this, then that. That's what my mind is always thinking. Like, it can do this or it can do that. And then most people be like, oh, well, if it can say it can do this or it can do that, you're not really picking anything. No, I pick both. Because I have bias on both. I just one is more heavy than the other. Until something happens that puts me in a predicament to where it's like, this is probably a better opportunity right now, just based off the risk. And bada bing, bada boom. And remember, Asian range was never taken out. It just got taken out. Right now. But honestly, with that hour can throw a lot of people off because they see the hour extremely bullish and they're already seeing a buy model happen. Their mindset is like, oh, well, this is the buy. Well, what if it's not? What's telling you this to buy? Okay, well, it can push out of here, but right now we've been consolidating. And then what we just looked at this morning when we first got on. the last couple of days been 200 some points, 300 points, and then now the most recent day has been I think it was like 150, and then we had another day where it was 200, and this day at that moment in time was only 85 points, 85 or 90 points for the whole day so far. So that means price ain't moved yet. So like something needs to happen, or it's gonna be just a whole consolidation day. But even if it's a consolidation day, we're still able to capitalize because what? We're in sync. We gonna be forever in sync, 100%. No doubt in my mind. Because all you gotta do is you just overcomplicated. That's all.
Dude said Backstreet Boys.
Bro, Jose, you took the trade? Cause you looking for a sale?
No, yeah, I messed it up.
Oh no!
And you're marking it up, and I'm not paying attention. So like, when you did your confirmation box, you did it like from all the way to the body.
Uh-huh.
I forgot the whole thing. Like if the
so you seen this?
Wick.
No.
Wick. So it missed my fucking entry.
Yeah. Yeah. So yep. Whenever you had that gap, that little tiny gap in that confirmation or imbalance, whenever you have that little tiny gap right there, you want to include that every single time. Every single time. Yep. That right there. That plays a big part, Jose. Dang, I thought you caught that one too. It's good though. We'll get him back. Dang.
I'm writing it down.
Right now? Oh. Yeah. Got up out of there. Hey, bro. It's so funny. It's so funny because when I was talking to Charles' son, he's talking about skits, and bro, that be playing in my head all the time because that same feeling, I had that feeling all the time. When I'm like, I hit the button, somebody back there.
I got out the sale too early, and then I put enough points on my buy.
Yeah.
Just
Yeah. I'm telling you, what helped me get over that stuff was risk. When I see risk and it's a decent risk, I'm with it. It's
God told him to be rich. That's all. He know how nigga would like me go act with some money.
oh man, in due time, man.
With a Lambo with a goddamn with a cheat in the front seat. That fucking color.
Yeah, man. And then look, right now, a buy model setting up. You just took out a low. Look at the 1 hour. Look at how it closed and look how we going into the next hour. So now, this is out the window for right now. And then you got this, but this is look how big this inversion is here.
I'm so goddamn desperate, I'd take it.
No. That's what we not doing. We not. Oh nope. Look, see, you see this little gap here? Boom. So guess what? It's not inverted yet. It's that. You got this little tiny gap, just like how we did with the confirmation. So you got to include that. So now this candle can confirm it as an inversion. Possibly. Risk 5 to make one. Risk 5 to make one. Man, listen. I know. I've been there. So just everything you feeling right now, I done been there. And you realize like just be consistent, and it's like it's gonna slowly fade away. Now, is it gonna go away? I'll tell you right now, it's not going away. That feeling is always gonna be there. Even teaching, that's like even that. I'm just like, oof. I don't want that feeling because I know when I start to feel it, I gotta cut loose. I'm like, okay, hey, and you one day you're gonna see it. I'm gonna get frustrated. One day I'm gonna get frustrated, and I'm like, man, we gotta end it early, or I would have to like lock myself out of everything and then teach because I'll be too focused on like the get back because I know I can get it back, and it's a bad thing to have. It's a good thing to know or how to do, but man, listen, if you don't use it the right way, boy, I might get off this camera and had nothing on. I lost everything. Hey, like this. Beat me out my socks. 100%. So look, that candle right there, it closed it. So now this is this. Oh shoot. That is now that. Boom. And then from that, look what you have right here. Boom. So this will be a buy model here. And that risk has to be at least 34 points. Ooh. Same how the other one was. Say it again. Yeah, at least it's high for right now. That'll be 60 points. So a little over a 1-to-1. That's not enough for me. No way. Yeah. Yeah, no, that's all 3 minutes. So yeah. Give me 2 seconds. I'll be right back. Go ahead. Okay, we ain't come down yet. What you would want to see is it would have made a little confirmation here, a little secondary one, like it did up here. But it's so, yeah, I don't like that. That's weak. Even from here to here. It's at a discount, so that's cool. It's just a risk. And like trades like that, I'm like, no, I just don't be feeling like want to take them. That high? So the high? Oh yeah, if it's at the confirmation, that'll be your buy entry. That'll be your buy to take it back up. And here's the thing. Looking at the 1 hour. No. Looking at the 1 hour and seeing how the 1 hour body closed inside of that 1 hour imbalance, this buy model could potentially play out and give you that decent push. Which one? Which one you talking about, Zach? You said sell model? Yeah, let me know what time frame you talking about. You talking about 3 minutes. So yeah, the way the 1 hour is playing out is pushing up. price can fall right up into this, and then it can push up, and then it can break out of this consolidation for a continuation up, because we did go tap Asian range low. But hey, oh, I think I know it. Wait, no, I see what that talking about. Come on, this high, this high taking out. That low is swept. Yeah, you guys show me talking about that. Yeah, I gotta see what you're talking about. On what time frame? Let's talk about the 4 hour. Because the 4 hour can be this. There. And then you can have this confirmation here, number one. And you can have number two. So you can look at it from this perspective. But also when it made that, it made this low, price pushed up into that, and then it went and took out this low too, made this new low, and now we're coming back up into it. So you can look at it from that perspective. But with this, since we're inside of this consolidation, just focus on this key area here, because it's been consolidating for so long, and then we finally got that breakout, and just following price based off of that. And these two consolidation points here and here. Me, I set an alarm down there. So usually I like stuff like this, like especially I'm about to walk away, because like once I go off the live, go chill with my daughter for a minute. So I'll just set an alarm here. Boom, boom. So me, I don't use limit or buy orders. Like I tell you guys plenty of times, there's nothing wrong with them at all. They're actually great to use. I just don't use them because it's my preference. There's nothing wrong with them. I never had a bad experience with them, anything. I just don't use them because I like hitting the button myself. I don't know. It's just, I don't know. Like, it's weird because I'm like, it's something I could use and benefit from a lot, but I just like seeing the market structure myself. So we go 3 minute. Three-minute confirmation high hit, and then too, if you do an alert, if you do add custom name, it doesn't pop up on your phone. It only pops up as in the message. So I'll do it in the message, and then that's it, and then I'll save it, and then that's it. See how it plays out. If it comes back down to it, if it taps it, and then from there, can we get a continuation? Could it play out? Like, okay, even in this situation, I can say, shoot, I just took this sale. I got a 1 to 3, probably 1 to 4. I don't even know how many points I made, but just close it out. So price pushed down, closed it, and then now this opportunity is here. I could take half the earnings I had from my first one and then try it on my second one, because this is 34 points. So me, 34 points, that's a little bit over. Yeah, that's too much risk. Ooh, never mind. 1 micro. That's too much risk. Yeah, I could do. Minis. I could do micros. Do 5 micros. $10 a point. $350. And that's the thing. Especially out the first one, so small of a risk and so big of a gain. With this one, even me sitting here thinking about taking it, risking profits that I made from the first one, is like, for what? So you can make more? That's not how it works. You want to be consistent. And that right there, that thought pattern that I'm having right now, or just that idea that I'm having, you're going to have that, and you want to have that same mindset. Like, do I really need to take that? Is it trying to make more? Like, what's more? Like, what do I say is enough? Because I'm not gonna lie to you guys. Like, once you get to a certain point, you're not gonna know when enough is enough. Like, you say, oh, I'm gonna stop here, I'm gonna stop there. Unless you actually, that's your number and you got that discipline, listen, if you got that discipline, shout out to you. If you got it, use it. But if you can see a number and like, I'm done, listen, the more the merrier. But I'm not like that. And that's just my personality. I like to see it push. Because based off, I feel like I got rewarded based off of the analysis that I did. But also a reward can be not what you expect, and it can come as a lesson. And I still look at a lesson as a reward because I'm able to learn from it and take that information, not the actual trade, but just the information that I learned from it. Like how Jose just said today, like, dang, I didn't use the gap of the imbalance. Boom, right there, right? Psychology of money. So right there, when it comes to that gap, that's something I'm putting in my bag. I'm like, bet. Like, I forgot the gap. I didn't include the gap. That's what threw me off. So I'm not looking at that like, man, I didn't take that trade. I'm like, I'm really kind of happy. I'm like, oh, I didn't see that. And that's how I used to be when I was back testing or just like forward testing. Even when I didn't have money to put into the market, I'll just be watching it. And I'm like, oh man, I missed that. I was excited because I was stuff that I wasn't remembering or I forgot. It's like clicking back in my mind. I'm like, bro, something so simple is stopping me from here to here. Like, what if you're right there? Right there. Like, the other side of what you're looking at is right there. And you just stop right before you get there. And you're like, never mind, I'm done. It's too much. Man, listen, you better break that wall down. At least see what's on the other side of the wall. You came this far. Break that thing down. So we got 2 minutes left. We got 1 minute left. Let's see. Here's that consolidation again. See how we had expansion and now we're consolidating again? Same old. Prices do the same thing every single time. Bigger scale, smaller scale. We just gotta find out which scale you're trying to be on today. Are you trying to be on the smaller scale or the bigger scale? We see a 5-minute model, sell model happen, seen the sell model, took advantage of the sell model played out, now buy model is happening. Am I gonna take advantage of the buy model? I don't like the risk. So I would have to go down on my contract size to take that. And do I want to go down on my contract size? No. All right, took a trade for today. What's the reasoning of doing it again? So just simply sit back and wait. I'm leave that with you guys, and I'll see you guys tomorrow, same time. We are starting at 15 minutes prior to market open. Let's get it. I'll see you guys tomorrow.